So, you want to be a real estate mogul? Hi, I'm John McNeil, and this is the Invest Strong Network. Welcome. So, this video, we're going to examine various ways that the budding Donald Trump or Sam Zales of the world can get going in investing in real estate. Now, in times past, it was a fairly simple matter. You would raise capital, purchase a property, be it residential or commercial or industrial, and you would skim rent off of the persons that were leasing your facility. And at the end of such a lease or two, if you felt as if you wanted to move on to bigger, better things, you could sell such property, get a capital gain on it, and move on to the next big investment. Now, that was yesteryear. These days, you have a variety of ways of investing in real estate. We're going to look at each one. Now, the first that we'll look at is, in fact, the old-fashioned way. So, when we examine the various means of investing in real estate, we're going to use 6 criteria, right? We will use the barrier to entry. We will look at the cost of maintenance. We'll look at the level of liquidity. We will look at the income potential. We'll look at the capital gain potential. And we will also examine the actual cost of conducting the transaction and holding the investment in question. Okay, so like I mentioned, we'll get started with the old-fashioned way. So if you want to purchase a property, and for the purpose of this particular video, we're going to focus on residential properties. If you want to acquire a property, you have to come up with a down payment. You will have to usually have some kind of attorney or accountant involved, have to have a survey done, all kind of things. You put the money down, almost certainly some kind of debt will be required to acquire these properties or that particular property. Now, I have done this, right? And in fact, I've invested in all 3 of the various classes of real estate investing that we'll talk about today. And the old-fashioned way, well, it has a very high barrier to entry, right? I mean, you have to have a large down payment if you don't have if it's not a cash purchase. And if it's a cash purchase, then you have to have an enormous amount of capital to do this, right? So very, very high barrier to entry. Also, owning property the old-fashioned way has very high maintenance costs, right? Leaky roof, plumbing that needs overhaul, some kind of electrical problem, always something going on. And as the landlord, you are almost certainly going to be responsible for getting it fixed. And sometimes those repairs can be enormous, right? So if something punctures the roof of a property you own, or if the HVAC system goes out, wow, it could be in the multiple thousands of dollars, tens of thousands of dollars to get that repaired. And that's on top of the cost of acquisition. Very high maintenance cost. The liquidity is also pretty low. So when you want to put this thing on the market, right, you want to sell it, kind of wash your hands clean of it. Well, there's a long, drawn out process of having to match with a buyer, having their finances come into line. Then you have to have an agent that's going to put the two together and work out the closing costs and all of this stuff. Very, very low liquidity. I mean, it can take months, sometimes years to liquidate a property the old-fashioned way, right? But Doing it this way, you do have high, very high income potential, right? So when you work out a lease with someone, they sign that lease, basically you get all of the rent that they put out, right? All of it. And that over the course of months or years, that can come out to be very, very sweet indeed, right? So for the high cost of acquisition and the high cost of maintenance, you get high income potential. Now, there is also a very high potential for capital gain. So like the great stories that you hear, I bought the house for my first property I bought for $150,000, and after fixing it up and leasing it out for 5 years, I sold it for $300,000. Well, yes, that's absolutely possible, and it has happened many, many times. Sometimes even bigger than that, right? You have some real estate investors who were fortunate enough to hold certain properties for decades, and the final capital gain that they were able to reap off of that's enormous, really on the level of equity capital gains. So that's sweet. And then finally, the expense of just holding it in the portfolio. So real estate the old-fashioned way has a very high expense ratio, as I mentioned, with the cost of acquisition, but also the cost of repair, maintenance, spoke about that. But also, taxes. You may even be responsible for utilities and insuring the property. All of this stuff adds to a very, very high cost of holding the properties in your portfolio. But in exchange for that, like I mentioned, you get high income potential and high capital gain potential. Now, the next category of real estate investing that we'll talk about are the REITs, real estate investment trusts. And for the purpose of this video, we'll talk about the publicly traded REITs, right? Now, the publicly traded REITs, and I did a video on this a couple of years ago. I encourage you to look at that. But the publicly traded REITs, there's a wide variety of them. And again, for the purpose of this video, we'll focus on the residential REITs. Now, the cool thing about REITs is that they have very, very low barrier to entry. So basically, with just a couple of $100, you can purchase REIT shares, or really with almost nothing, right? If you use Robinhood or Webull or any of the electronic exchanges, you could acquire the shares of a REIT for pretty much next to nothing, right? They have very low maintenance costs. Now, in the REIT structure, the cost of maintenance, it's definitely there, but then that is borne by the operator of the REIT, not by the shareholder. So the very low maintenance cost for you, and that has its value. It has maximum liquidity. So as easily as the shares can be purchased, the shares can be sold, and it's just that easy. It has modest income potential. Now, the yield on most REITs, well, they can go from basically 2.5% to some have yields as high as 6%. And that's okay, but that's nothing like, of course, the income you could get from owning a rental property, right? So you exchange some of the headache and the high maintenance costs for modest income potential. Capital gain potential. Well, it's certainly there, right? You can acquire the shares. Maybe they go up. You can sell it and, make nice capital gains along those lines. And especially if you hold the REIT shares in a dividend reinvestment structure, then actually the capital gain potential grows exponentially. However, one of the downers of a public REIT is that the price of REIT shares move with the vagaries of the overall stock market. So you could very well have a situation as what happened in 2022, where the real estate market actually moved up nicely, writ large, right? But the cost of the price of the average REIT actually dropped by between 25 and 30%. And that demarcation is caused by the overall financial markets, the stock markets being in a bear market, even though the real estate market was actually still booming, right? And that's just one of the trade-offs that you have to accept. And to own the shares of a REIT, whether you own it through a real estate investment, a dividend reinvestment plan, or on one of the electronic exchanges, the cost very, very low, right? So almost nominal. So that's another aspect. Now, the third way of holding real estate and investing in it is kind of a hybrid creation of both a publicly traded REIT and owning shares outright. And we're talking about crowdfunding for real estate. Now, I personally use the Ground Floor platform. Ground Floor is pretty cool. I've done many videos on it, and I've been able to pull a nice little return off of Ground Floor. There are many other crowdfunding for real estate structures out there. For the purpose of this video, we'll use Ground Floor. Now, Ground Floor has a very low barrier to entry. Basically, with $10, open an account, start investing in these flip projects. Maintenance costs very, very low, right? Almost nominal, to be honest with you. Almost no real cost, because the maintenance costs are really borne by the project operators. Now, as it relates to the liquidity, pretty low liquidity, because when you put your funds in a particular project, real estate project, you will not get those funds back until the project is flipped, sold, and, comes to full fruition, right? That could take months, certainly. Sometimes I've noticed even a couple of years on some of my Ground Floor investments. But, low liquidity. That's just what you have to live with. The income potential is actually pretty sweet, right? And I've been able to average about 8.25% income on my Ground Floor projects since 2018. That's not bad at all. The potential capital gain, well, there really is no capital gain potential in the Ground Floor structure, since these are all debt related investments. But in other crowdfunding for real estate structures, you can make some capital gain depending upon the price that the developer gets for the project once it's completed and they're able to sell it. Overall, modest capital gain potential and very low cost of fees. Again, the operator and the platform Ground Floor, they charge just very, very modest fees in order to hold the account and to conduct transactions and things like that. So that's really very, very modest, really neither here nor there as it relates to the overall scheme of things. So looking at everything, all things taken into consideration, what do I think is the best way to invest in real estate for the potential investor? My opinion, do a little bit of all of them, right? And if you can get the high capital gain and income potential of owning properties outright with the stability of regular income through a dividend with a publicly traded REIT, and the higher income and higher potential capital gain of a crowdfunding for real estate project, own all three of them. Right. And I really think that would be the best way to go. It certainly has worked well for me. All right. So hope you found this video informative, instructive. If so, hit that thumbs up button for the brother man. I'd really appreciate it. And leave a comment. Let me know what you think of real estate investment and the best way of doing it. I'd really appreciate it. And of course, subscribe. Please subscribe to Invest Strong. I'd really appreciate it. Thank you so much, friends, and good blessings.